In this episode, always the most requested episodes, but what can you actually write off? Can you write off a yacht? Can I write off my haircuts? What about if I want to get a brand new suit? Should you, can you, or how can you? All in this episode coming up next. Welcome to Office Hours, a tax podcast by Fujikawa Associates, and we're your hosts, Josh, and this is Derek Fujikawa.
Hey.
Derek, how you doing today?
Good, thanks. How are you doing?
Good. So we are diving into the most commonly shared tax write-offs on Instagram. Some of which you agree with, some of which you don't.
Yes.
Let's just jump right into it. How can you write something off? If it's even possible at all.
Sure.
Okay, let's just start over off the bat. Private school tuition.
College, possibly, but anything below that, no.
Gotcha. I mean, you're already paying taxes for public education, so
Yes.
it goes to fund that and not whatever private school down the street.
Yes.
Fair enough.
Yeah.
Okay, how could I write off a yacht?
If you use it for business, at least 50% for business, then you can write it off. But
Okay.
most people don't use their yachts for business. But yeah, it has to be at least, it's like a car. So it has to be at least 50% business use, and then you can write off. You could potentially bonus depreciate a big portion of it.
Which is what the billionaires do with their private jets and their yachts.
So say you're using it to go to and from business locations, or
Yeah.
if you're chartering them out to and charging people for the use, then it's a business asset and you can deduct. But if you're just using it 90% of the time to go on vacation, take friends and stuff like that, then no, you can't deduct.
Okay, so when I buy a yacht, you can
Yes,
only come
yes,
with me
yeah.
like once a quarter. Other than that, we're using it for business. Unless I guess we're just hosting real estate masterminds
Yes,
on a
yeah,
yacht.
yeah.
Okay, how about second homes or vacation homes?
Those can be deductible. So for just an individual, you can deduct the property taxes and the interest up to certain limits. So mortgage interest, you have a cap of $750,000 of principal. So if your primary home is already over that, then you can't deduct the interest on a second home. But if you're
Got it.
below that, then you can deduct any interest on the principal up to that limit above primary residence.
Okay, so if you're buying an Airbnb, there is a way.
Well, Airbnb is a different story. So
Oh.
if it's a business asset, then you can deduct it. But if it's just a second home, just a vacation home that you're using personally, then you're under those personal limits. That's $750,000.
So then if you can Airbnb it, you should Airbnb it.
Yes.
Okay. Professional sports teams. Gosh, I don't know.
If it's a business asset, you can deduct the cost of anything relating to it, but that's a very select few people that can actually buy a sports team.
What about like client entertaining costs?
The IRS did away with that. Well, it's been a little while now, actually. It's been about 4 or 5 years. But before you could deduct meals and entertainment, you had to reduce it by 50%.
Okay.
I don't remember the year, but it was during one of Trump's tax law changes. They did away with the entertainment portion. So you can still deduct meals up to 50%, but any entertainment. So you can't take a client golfing, can't take them to a Giants game or a Warriors game. You can, but you can't deduct the cost.
Gotcha.
Non-deductible cost. So it is deductible on the state side. So you do get a small 50% limitation on the state side. It still go by the old rules, but the biggest deduction on the federal side you don't get.
So I'm adjusting my suite budget for next year.
Yes,
Is
yeah,
that? Okay, what about beauty treatments or cosmetic surgery?
The general answer would be no. I guess I could see some potential, say you're an actor that needs to present a certain persona, a certain look, then maybe,
Yeah.
if that's part of how you produce your income. But in general, if you're trying to use it as advertising or something like that, I don't think that would fly with the IRS.
Gotcha. How about the same for haircuts?
Same thing, I would say probably not. It's a personal expense, and most people get a haircut regardless of if you're in business or not. It's generally a non-deductible expense. There may be some very narrow ways you could potentially deduct them. The vast majority of the time, yeah, it wouldn't qualify as a business expense.
What if I was a production studio that had a set of actors or people on set, and then now I want them to look a certain way? Now that business, if I'm doing it for everyone, dressing them a certain way with costumes.
Yeah, that would probably qualify. So again, you'd probably need to
Yeah.
make sure you have a system in place and everything. But yes, that is one maybe narrow avenue where it may qualify.
But 9 times out of 10, it may be not worth the extra audit risk to have a YouTube channel and do my haircuts.
Yeah, exactly.
Fair enough. I will keep paying for my
I mean,
haircuts
if you want to
then.
be really aggressive, you could try and touch the IRS, but
Yeah. Okay. What about pet care?
no. Pet care, that's one of those kind of running
Personal.
jokes with accountants. People ask, can I deduct my dog? Can I deduct my pets? Write off my pets. But pets are just personal expenses. If it is a service animal, then it could qualify as a medical expense. That would be one area where you could deduct pet care. But if it's just your pet, your little companion, then no, unfortunately, that would be not deductible.
That's why I don't want to have pets
They're
because
very
man,
expensive.
I know. And like I see like for shots or even if they have to have minor surgeries or
Yeah.
even major
Yeah, because you
surgeries.
can't really get insurance for them. You just got to pay it out of pocket.
Kids are already expensive
Yeah,
enough.
yes,
But at least those are deductible.
Yes, yeah.
Okay.
Although I don't know if it makes it worth it money-wise.
It's true.
There's other benefits, right?
Okay, gambling losses.
So gambling losses you can deduct to the extent of your gambling winning. You can't create a loss, but you can deduct your gambling losses
To offset your winnings.
Yeah.
Okay, so if you went out and you placed whatever bet and made $10,000, but also lost $5,000 the next night, you net $5,000, so that's what you're paying on.
Yes. You don't just report the 5,000. There's separate sections that you reported on, but yes, you can deduct up to 10,000. You could report as a loss on your return.
What about donations? Like, how can a business or a person write off donations?
Donations are itemized deductions. So if you itemize, if you file a schedule, if you have a house, and usually the house is what pushes you into the schedule, you have the mortgage interest, then the donations will help your tax return because it'll add to your total itemized deductions. If you don't itemize and just take the standard deduction, then it's not going to help you much because it's an itemized deduction. So if it keeps your itemized deductions still below the standard deduction, then you'll just still take that standard deduction amount. Your return really won't change based on the higher amount of donations. And the only business that really deducts donations directly against its business income is a C corporation. So if you're a sole proprietorship, a partnership, an S corporation, those actually will be reported separately and passed through to you as the individual, and then you'll put those on your schedule. So again, if you don't itemize, then they don't benefit you.
It's actually only taken me a year to actually understand that entire sentence. So if you don't know what type of business you have, then yes, more reason to talk to Derek, because your business has to be categorized a certain way for you to either put it on yourself or on your business.
Yes.
Fair enough. Okay. Media equipment, so cameras, mics, lights. Who can write that off?
If you're using that for your business. So you don't even have to necessarily be in the media business, but if you use that media for your business, like in my instance, if I'm doing a podcast and I need that equipment to do that podcast as part of my business, that would be deductible. Equipment would have to depreciate that over time. You can bonus depreciate or use Section 179 to write it off. But in general, yeah, it's a piece of equipment, so it'd be something you depreciate over time.
Like a camera, you're saying it would have a useful life that divide over a certain portion of
generally
years?
5 years, I would say, for equipment or things like that, yeah.
Okay. What about travel? What is a right way to write off travel?
If you're traveling for business, then there's a number of kind of factors that go into it. If you're there just for business, all the entire trip is business, then you can write off everything. You can write off your flight, hotel, 50% of your meals, everything. The gray area comes when you have personal in there and things like that. So then you'd have to either allocate between personal and business. Things like flights, if more than half of your trip is business, then you can deduct your entire flight. Your stay would depend on the number of days you're there. If you're there half the time for business. And personal, then you could take half of your hotel stays and things like that. So, and then there's that sandwich method that you can use. We have another video on that about using a weekend to sandwich some vacation time into your business trip and actually be able to deduct the entire travel cost.
Is there a way to also get my family on that, or no?
If your family is part of your business and they're doing work during that time, potentially, but it would be hard to justify. You would have to really document that and show that you're actually doing work.
Gotcha. So 2 kids that I have, children modeling and staging is a little bit harder for an Airbnb write-off. But if my wife is acting as the guest communications person, or obviously meeting some vendors, sandwich method.
Yes.
All right, so I'm still paying for kids' meals, basically.
Yes.
Fair. Okay. Don't write off Happy Meals right away.
No.
All right. How about education and conferences?
So education, it has to either enhance your current job or forward your current job, or be required by your employer or by law. So like I'm required to take 80 hours of continuing education to keep my CPA, 80 hours every 2 years. So obviously that's deductible because I need that in order to maintain my license.
That's a lot.
It is. It's more than attorneys. And
That's a lot.
the laws do change a lot. It's easy to pick up the hours.
Tangent but not watching YouTube videos is not considered.
No, it has to be a qualified CPE provider. So you can do it online, but it has to be from one of those providers. And there's a test at the end to make sure that you understand. Just click through a presentation mindlessly. So yeah, I would need those hours so I can deduct that. If you're doing it to further your existing career or your existing business and kind of help that, then that is deductible against your business income. If you're looking for a new job and you start taking classes in order to change jobs, that's not deductible. Yeah.
Okay, so you have to already be and have that be required by your employer.
Either required or something that helps enhance your existing job.
Okay. For the real estate investors, real estate conferences.
And that would enhance that falls under that first category.
Last one, and probably the most common one, like how do you actually want clients to document meals?
The easiest thing to do is to take a picture or get a paper receipt and write down the important things, who you ate with, and just a really quick summary. It could just be one sentence or a few words on what you discussed. Then just take a picture of it or
Okay.
scan it or whatever, but document it. And then from there, summarize it onto, say, a spreadsheet. And
Yeah.
just give me the totals. But knowing that you have those back up there gives me the comfort level of putting those on the return and knowing that they're legitimate business meals.
Okay, fair enough. We covered most of the common random
Sure.
write-offs. Is there any other fun ones that you can think of? Home office.
Home office.
We said that a few times now on a
Sure,
few different
sure.
episodes, but I'm sure that's one of the most common questions. You have a different home office than most.
So this is a little different because I have a separate structure. So it's easy to separate the cost, and I paid specifically to have this structure built. So it's pretty self-contained, right? I know what I paid for this. I can deduct that as a structure, so it's over a certain amount of years. But the most common home offices say you're using a home or part of a room in your house. And in that instance, you just take a percentage. So say the one room that you're using for business, you just take the square footage of that room and then divide it by the total square footage of the house and deduct the costs relating to the overall house. Use that percentage and say mortgage, interest, property taxes, which are already deductible, but you can deduct against your business. But other things that aren't normally deductible, like insurance, utilities, maintenance, gardening, all those things, you can apply that against your business income.
But again, you have to track all that and get the percentages.
Yes. Yeah. So the percentage is pretty easy. You just figure that out, and then you have to track all of your costs for the house. But you do need to make sure that it is a business use area. It can't just be a rec room that you take your laptop in and use every once in a while. It does have to be an office.
Okay, fair enough. If you have any questions about anything that we covered today, you can definitely reach out to Derek in the link below, or also leave them in the comments and let us know what's your favorite write-off in the comments down below. Derek, I appreciate you demystifying it all.
Sure.
And I will see you all on the next one. Cheers, guys.
All right, thanks.